Good afternoon and welcome to GrainTV. It's June 21st, 2013. To my left is Logan Burgess and I'm Brock Shimbano. We had another negative day for the grain markets. Let's turn over to Fire Tip to see how we ended the week in Chicago. Corn on the old crop was down 11.5 cents. Corn for new crop was down 4 1/4. Soybeans, old crop, down 4 1/4. Soybeans for the new crop down 11.5. Wheat in Chicago down 2.5, and Kansas City was off just 1/2 cent today. Another strong day for the dollar index as well. You know, Logan, we did have another negative day across the board for the grain markets. What do you make of today's trade?
Yeah, you know, it kind of seemed like a continuation of what we saw yesterday in the grains. You know, some general weakness there, certainly helping things out and helping prices move lower, I think, was, as you mentioned, another strong day for the dollar index. Take a look here at a daily chart here for that September dollar index contract. You can see here the third day in a row of strong gains there. And this really got started on Wednesday with the Federal Reserve meeting and hints that they could be tapering their bond buying program here in the coming weeks. So that's something that could be affecting the grains to come. But right now it really seems like, in particular on that new crop, a lot of speculation about acreage and yield on this crop continues to weigh on things. We didn't get any formal announcements today or new fundamental news as it regards to acreage or yield, but we did get some good information out from Planalytics. They had a good report detailing their expectations for the yield on this new crop. Brock, can you kind of break down that report and kind of what does that mean for prices here?
Yeah, our weather intelligence provider, Planalytics, basically released their most recent round of yield forecasts, and basically they base it on greenness across the country. They also use good to excellent ratings from the USDA, and then they use historical trends for certain areas across the country as well. If we take a look at the corn yield forecast here, you can see there's not big changes anticipated by Planalytics based upon what they were reporting last period. But one area to note is Indiana. They're looking at about a 2.9 bushel per acre increase. So that's an important area to note. As far as across the country, Planalytics is predicting about a 0.3 of a bushel per acre decrease from the previous reporting period. This is 9.3 bushels per acre below the current trend line yield and 7.7 below the current USDA projections. So, you know, Planalytics is coming in quite a bit lower than what the USDA is forecasting right now, but comparing it to last year, this is 25 bushels per acre below last year's disastrous crop that we had. So we're still looking at a pretty good crop across much of the growing area for corn. A little bit of a different story for soybeans. You can see that they're projecting a little bit better yields than what they had previously in their last reporting period, up by about 0.2 of a bushel per acre. This is still about 2.9 bushels per acre below the current USDA projections, and it's about 2 bushels per acre above where we were last year at this time. And of course, if you want a full state-by-state breakdown, head over to grainhedge.com. You can take a free demo and we'll get you out the full report of the Planalytics yield forecast.
You know, Brock, looking at the corn numbers here, certainly quite a bit lower expectations for yield than what the USDA currently has projected. You know, in my mind, that seems like it certainly could support grain prices here to come. And last year, Planalytics did a pretty good job projecting final yield pretty early in the growing season. Certainly, we still have a lot of time left to go, but looking at kind of where we are right now on that DS13 corn contract, what would you expect this to support things here moving forward?
You know, I think it will if we do see some yield reductions. And basically what Planalytics was citing as the reasons for the yield reductions right now is the late growing season, the late stages of the lateness in the production phases that we're going through right now. And this is really going to put the most important production phases into the later part of July and early August. So we're going to be looking at possibly some heat during that time, maybe some dryness, so we could see some yield reduction, and that's really what Planalytics was citing here. So if that does come, and we do, at the end of July, see some hot, dry temperatures, we definitely could see some yield reductions made by the USDA.
Yeah, absolutely. Well, you know, as it relates to acreage here, we haven't had a lot of new information here recently, but the trade certainly focused on next Friday's report. That's when we're going to be getting the big June 28th planted acreage report. And we did get some information out today from Reuters. They do a poll of analysts, and the average analyst guess is looking for 95.3 million acres to be reported planted for corn by the USDA next Friday. If we compare that to what the USDA cited or projected in their June WASDE report, that's about 2 million acres lower than that. So certainly the trade is looking for substantial acreage cuts in next Friday's numbers. And if you look at private analysts within that group, there's even some big names looking for planted acreage numbers in the low 94 million acres. So certainly in my mind, that's going to support prices. If we see, you know, an acreage number below 94.5 million acres, I think that would support the trade on Friday and moving forward. But we're going to have to wait and see what the USDA does project next Friday. Next week, we're going to be really focused on expectations coming into that report. And on that day, day, we're going to be getting quarterly grain stocks as well. So it will be a busy week for the grain market. But in general, today certainly saw a lot of weakness across the board. Thanks a lot for joining us here on Grain TV. Have a great week. We'll see you next Monday.